Welcome to Harvest Asset Management's second monthly market review. Despite the harsh monetary policies by the central bank and the Russian-Ukrainian crisis persisting, the IMF in its last global economic review of January 2023 revised its forecast for economic growth. At the global level, global growth forecasts for 2023 have been revised upwards by 0.2 points, basically 2.9% from 2.7% according to the October 2022 forecast, due to the recovery of the Chinese economy. In sub-Saharan Africa, economic growth forecast will increase by 0.4 points to 4.1% from 3.7% last October according to the IMF, explained by the good health of the oil sector. For the CEMAC zone, we will be waiting for the decisions that the BIAC will take at the meeting of the Monetary Policy Committee by the end of March. As concerns inflation, it appears that for Cameroon and Chad, the October 2022 forecasts made by the IMF have been exceeded based on the statistical report published by the institutions in charge of statistical data. This increase in inflation is mainly related to the increase in the prices of goods. In contrast, Congo and Equatorial Guinea did not attain the level of inflation earlier projected by the IMF, according to the National Institute of Statistics as perceived on the chart. It should be noted that this level is still very high, but we are incorporating this situation into our investment strategy for the rest of the year. Facing this environment marked by increasing inflationary pressures, the Treasury market has begun the year very timidly. We can observe from this chart that the outstanding market debt increased very little in January, but less than proportionally to the sub-regional nominal GDP, which allowed the market debt ratio to remain stable at 7.7% of CEMAC GDP. It's worth noting that for January 2023, the Republic of Congo contributed the most to the volume of government loans, 26%, followed by Gabon, 25%, and Cameroon, 24%. Cameroon's yield curve continues to rise in both the short and the long term due to tightening of monetary policies for the short term and the economic growth through increased inflationary pressures for the long term. Those of Congo and Gabon continue to decline for the long term, nearing that of Cameroon. Nevertheless, they remain high in the medium term. This decline in long-term curves of these countries is due to economic situation, which is still very fragile. After a drop in December 2022, we note from the bond segment of CEMAC's financial market, BVMAC, that the outstanding amount of the market or the market debt is experiencing a considerable growth, explained by the entries of EOG 6.25% net 2022-2028 and BDAC 6% net 2022-2029, which respectively 175 billion and 110.8 billion CFA francs. Concerning the equity segment of the CEMAC's financial market, BVMAC, the floating capitalization grew during the month of January 2023, as did the bond segment of the market. It decreased by 7.4% between January and February 2023 due to the delisting of all the shares of SIAT from this segment. At the macroeconomic level, we expect the rate of inflation to fall to 5.3% for the CEMAC sub-region. This will be due to the fact that the key monetary policy rates of the central bank will be maintained at their level of December 2022 at the first Monetary Policy Committee of 2023 at the end of this month. At the level of the market, faced with the high interest rate environment, bonds provide us with a good return, but we will continue to invest in securities from low-risk countries in order to propose more reliable offers to our clients. The equity market presents us with a good prospect at the beginning of the year, and we believe that this trend will continue, which is a good way to diversify in order to bring better investment solutions to our clients. With this, We thank you for listening and we hope to see you next month for another market update.